The U.S. Treasury index inverted last week. Is this the sign of a coming recession? And what will be the impact on future reverse mortgage applicants? Welcome back to the Industry Leader Update. Investors may have seen the dreaded check engine light on the economy. Last week, the spread or the difference between the 10-year constant maturity Treasury rate, or CMT, and the 2-year constant maturity Treasury inverted. Last Tuesday, the yield on the shorter-term 2-year Treasury was actually higher than the 10-year. Now, that typically means investors don't have much confidence in the long-term economic outlook or for growth. It's also a sign that a recession may be just around the corner. Now, just how accurate of a recession indicator is an inverted yield curve? Turns out pretty darn good. Since 1955, an inverted yield curve has arrived before each recession, that according to a study from the Federal Reserve Bank of San Francisco. A strategist for Commonwealth Financial Network found 28 occurrences of a yield curve inversion since 1900, and 22 of those 28, or 80%, were followed by a recession. A recession is typically defined as a decline in the nation's GDP, or gross domestic product, for 2 consecutive quarters. So what's driving this yield spread inversion? Many experts expect or suspect that it's the Federal Reserve's planned series of interest rate hikes, which began during its March 16th meeting of the Federal Open Market Committee. They voted to raise the federal funds rate by 0.25% or 25 basis points up to 0.5%. Now, just the fact that some Wall Street and investors are resistant to that change shows you just how ridiculously low interest rates are. I mean, seriously. The Fed is going to fight inflation with a federal funds rate as high as only 2.8% 2 years from now? Something tells me that it's unlikely. Our nation's central bank may find themselves being forced to increase rates even higher to throw some water on the flames of inflation that continue to spread. So what does this mean for those who may be eligible or inclined to apply for a reverse mortgage in the future? First is if they are carrying substantial credit card debt, their cost of borrowing is going to significantly increase. And those with high balances may find themselves with a higher minimum payment as well, creating a cash crunch. Second, mortgage rates are going to go up, and that reduces the purchasing power for potential borrowers, and it also increases the starting or the expected interest rate for the federally insured reverse mortgage, or HECM. And that higher rate means, as we know, less money that's going to be available to the borrower. Case in point, since March 1st, the 10-year constant maturity Treasury rate has increased by 76 basis points by March 30th. Now, third, in addition to the surging cost of energy, food, and retail goods, the increased cost of borrowing is another form of inflation that will tap the brakes on credit-driven purchases, and that has a cascading effect. Economic uncertainty is at its highest level that it's been in decades, but ironically, this is the time when many freeze and actually do nothing, when instead they should be considering what financial moves they can make today that are likely not to be available tomorrow, a closing window of opportunity. Now, what are your thoughts? Leave those in the comment section below, and if you'd be so kind as to share this week's episode on your social media profiles on LinkedIn, Facebook, and Twitter. Don't forget, we have a YouTube channel. You want to hit that subscribe button. In fact, smash it. And then also hit the notification bell. That way you never miss an upcoming episode. And speaking of episodes, each and every week, we've had it now, for over 13 years, is HECM World Weekly, the nation's only weekly podcast for the reverse mortgage professional. I almost couldn't get that out after 13 years, but yes, it's there. You can catch up on your reverse mortgage news on the go, and many do appreciate that. So be sure to check out that podcast. Apple users can also listen and subscribe on iTunes. That's it for us. Have a great week, and until we see each other again, happy originating.